So what would it mean for the world energy markets if Chavez was out of the picture or sidelined? We're joined now by Carl Larry. He's the Director of Energy Derivatives and Research at Blue Ocean Brokerage. Carl, good to have you with us. Thanks so much for coming in. So what would this mean if he was sidelined from the daily decision-making in Venezuela?
Well, I mean, the issue is that we just don't know. And I think that everybody wants to say that the good thing would be that he's out of the office. But there's just so much turmoil in that country that it's hard to say who would be in control of that country at that point. And that's where things get really, unsure. And we have a lot of oil at risk there.
How much are we dependent on the oil that gets pumped out of Venezuela?
Well, Venezuela is about the fourth largest supplier to the U.S. right now. So there's a lot of oil there. But again, we've seen something like this in Libya and or Iraq at that point, that once oil gets going and you have a new regime, it's hard to get that consistency and that flow back. So we could see some issues there.
What has been Hugo Chavez's strategy using oil in order to promote political agenda?
Well, I think that one thing for sure is that it's always about the money, and he's looked for the best deal. Whether it's been Russia in the past few years or whether it's been China, he's actually been very proactive to make that work. And there's a lot of oil down there. Like I said earlier, it's just a matter of who gets it and how much.
What about the alliances within OPEC? I mean, do you have Iran and Venezuela always on the same side, and Saudi Arabia and other oil producers on other sides of the table?
Pretty much so. I think, as far as it goes, Chavez is pretty much anti-American outside of the money. I think that, he's very pro-American for whatever revenue we send him. But definitely, politically wise, he wants to stand against America and what we stand for. So, again, it's going to be a tough call. We'll see what happens in the future. We just don't know.
All right. So right now, no disruption in oil supplies from Venezuela, but that could happen.
It could happen, and therein lies a lot of risk. I think the IEA reserve release earlier this week was all about putting more oil on the market and getting more supply going. But the problem is that there's always a lot more risk involved to the upside than there is downside. We have hurricanes, political risk, and this one just pops up just so conveniently.
Right, we're entering the hurricane season right now. You talked about the release of oil mandated by the International Energy Agency. That took place on Monday.
Correct.
Price of oil goes down. Everyone was looking right about $90 a barrel. Everyone was looking for that to crack below 90. Didn't happen.
Right.
Oil now, end of the week, $95 a barrel. It's almost as if that decision wasn't taken.
Well, I mean, when you look at the big picture, I mean, economies grow, and we're all trying to rebound. We're all trying to get bigger and better and faster. So, it comes down to oil. It has a potential to go to the upside because we need it to grow. So it was a nice idea to try and put more oil on the market, but everybody's looking at this as an investment, not a commodity anymore.
All right, what about the notion that the release of oil, at least from the U.S. Strategic Petroleum Reserve, had to do more with repairs that were already in the works to the salt caverns in which the oil is stored than any immediate need to put more oil on the market? Because there was even a bill in Congress that had allocated money to repair these caverns.
Yeah, I think that, they needed to do repairs. They also wanted to kind of give a little ease to the economy over the summer. I mean, we didn't see much from the Fed when the FOMC meeting went on. So I think this was like a planned ease for the American consumer. But like we just said, it's not really working too much right now.
Do you see that people are going to be using more gasoline because the price has come down a little bit? I mean, it still is much higher than in previous years. We're about $3.80 a gallon. Has gasoline usage changed?
Well, gas usage has changed in a sense that we're driving a little more fuel economical cars right now, but also, too, as people get used to the price, it starts to increase demand also. When we know it's not going to go to $4, but we know when we accept it's not going to go to $3, we're going to go back into the demand mode.
Do you think that this is a long-term strategy on the part of the U.S. government to get the American public slowly to accept higher gasoline prices as just a fact of everyday life? Because if we compare the price of a gallon of gasoline in the United States with the same price in Europe, they're already paying much higher prices.
Oh, sure. And I think that's the key here, is that it's not about oil prices anymore. It's about conservation and learning not to use as much as we want to use. I think that's the idea. I think the idea of having big SUVs and large trucks and driving all the time is going to be on the consumer to kind of scale that back. The prices won't go down as much as we need to curb demand.
All right. I want to thank you very much, Carl Larry, joining us from Blue Ocean Brokerage. Appreciate it. Thanks so so much for your insight about Hugo Chavez and his battle with cancer.